Knock, knock, everybody. Derick Van Ness here, investor, wealth strategist, life adventurer, and I got a doozy for you today. We are going to be talking about, is it possible that life insurance is better for growing your wealth than real estate? Now, I know that sounds crazy because so many people love real estate. And listen, I've flipped a couple hundred houses myself. I've owned a couple hundred properties. I love real estate. I'm just here to tell you that by the end of this video, my goal is to help you understand why I might be able to say that and how valuable it can be. Okay, so let's jump into it. And let me just tell you how I learned this, right? I was a full-time real estate investor from 2006 until, 2003 until about 2010. And then there was obviously a weird thing that happened. And then I did it for a couple more years, 2015, 16, 17. And let me just tell you what I learned from all that. I was making lots of money, and one of my really good friends, Garrett Gunderson, was also doing really, really well. He was on the financial side, did a lot of life insurance strategies. I didn't understand that. To me, life insurance was like this thing you got if you in case you died early to take care of your family, which is totally cool. But I didn't see how that could compare with what I was doing with fix and flips and rentals and all those kinds of things. So I didn't get it, right? Well, so one day he sat down with me and I said, Garrett, tell me about this. Why is this so important? And he pulled out a napkin and he drew out on this napkin all the reasons that he uses life insurance and actually how he used it to enhance his real estate holdings at the time and a lot of other things. And I was blown away. Well, that was way, way back in probably 2005 or 6. And now obviously here we are 15 years later, and I can just tell you I have learned a million things, and I won't tell you all of them in this video, but I want you to understand how valuable life insurance can be. And I'm going to tell you how amazingly similar real estate and life insurance can be if you use them properly. Listen, there's a right and wrong way to do real estate too, right? There's a bunch of knuckleheads who overpay and lose their drawers, and it's not good. And life insurance can be done totally incorrectly. It is not about the tool as much as it's about the person who's using the tool, right? Just like a hammer. If you give it to a master craftsman, he can build you a house. Give it to someone who doesn't know what they're doing, they're probably going to smash their finger, right? So it's not as much about the tool as it is about the person wielding the tool, and you have to understand it. So my goal here is to help you understand how to wield tools like real estate and life insurance properly. Today we're really going to be focusing on how powerful life insurance can be and how similar it is to real estate. So let's get into it. So the first thing you know about life insurance is death benefit, right? That's what everyone knows. When I die, it pays. And listen, that's super important if you've got a family or people who are dependent on you, or if you want to leave a legacy behind for charities, for your church, for other things that matter for you, then the death benefit is extremely important, right? Now the death benefit does a couple of things, but most notably, it has a guaranteed value that's going to get paid out at some point in the future if you do some type of permanent life insurance. I'm very partial to whole life insurance in most cases. There are places for other types of insurance. Term insurance is great if you're trying to cover a need very simply, very basically, but if we're using a real estate comparison, term insurance is like renting insurance because at some point down the road, you're going to walk away and everything you put into it's gone. Whole life insurance is very much like buying a piece of real estate in the sense that it's going to build equity, it's going to save you taxes, it's going to go up in value, and it's going to be really valuable, right? So death benefit backs all of that and ensures that at some point it's going to pay out. So that ensures that you now have a legacy, either for your family or for things that you care about, and that money can live beyond your lifetime, which is something that real estate also does, right? And what a lot of people want to be able to pass on to their family. In the case of life insurance, instead of passing on a bunch of equity in a piece of property, you're passing on a bunch of cash that your family can then use to buy property, start a business, get married, whatever they decide they want to do with that money, right? So another thing that life insurance does, very similar to real estate, but I would argue in many ways very even better, is life insurance creates guaranteed, consistent cash growth. So what do I mean by that? Well, with life insurance, as you're making your payment every single month or every single year, that money goes into an account where it's got guaranteed growth. Like right now, life insurance companies have been guaranteeing 4%. There's some legislation that might change a little bit of that, but as of right now, that's what's going on. plus a dividend if you work with dividend-paying mutual companies, which is what we endorse and who we prefer to work with because that grows your cash even faster. But here's the thing, you're going to get a guaranteed rate of return on your money every single year forever, right? Like these companies have been around 100 plus years, some of them as much as 160, 170 plus years, and they've always paid. They've always been able to deliver. So your money is going to go up and grow for you every single year predictably. No market ups and downs, no fluctuations, no vacancies, but like real estate, creates consistent cash flow, right? Now real estate has tenants and they disappear and create problems. So there is that side of it. Life insurance is kind of like having a rental that grows every single month and reinvests in itself, but you don't ever have to change toilets or deal with tenants or vacancies or repairs or any of that kind of stuff. So I love that about it. It's super clean, it's super simple, and it has that guaranteed growth. Another thing that people really love about real estate is it's got tax advantages, right? You get cash flow, you can get some depreciation or write off the interest, and you can take that and kind of offset a lot of that growth. What's really cool about life insurance is you pay taxes as the money goes into the policy, but once the money's in there, it gets to grow tax advantaged. Now I say tax advantaged because if you withdraw the money out of a life insurance policy, then you will pay taxes on the growth. You can pull all your principal out first, but once you get to that growth stage, all the interest that it's been earning, then you would pay taxes. However, something that makes life insurance so unique, and it's similar to real estate in a way, is that you can do loans against your policy. So what does that mean? That means you take a secured loan, your cash stays in the policy. You can take a loan, it's almost like having a line of credit against your cash and your policy, and you can go out and use that money for other things, right? So that gives you liquidity, but that money, because it's never coming out of the policy, you may never pay taxes on it. If you don't ever withdraw it, if you just use the loan provision, you won't pay taxes on any of that growth, and then when you pass away, all of that bigger death benefit that's been built up by the cash value if you structure the policy right, goes to your heirs and they get it tax-free because death benefits are tax-free, right, or income tax-free. So you get that tax advantage, and I would argue that life insurance tax advantages are much greater long-term than real estate tax advantages might be because you really, really do get to grow, and as that snowball of cash inside of your policy is growing every single year, all of that growth is growing tax advantaged and potentially tax-free for you to be able to use at any point. One of the things that I do really love about life insurance versus real estate, and this is probably my single biggest downside with real estate, is real estate, you can build up equity, but real estate's not liquid. Like I can tell you a story when I was in the mix and flipping a lot of houses, and then the market started to crash in 2008 and 9. I had $500,000 in equity in several properties. I could not get any of that cash out. I literally had the power turned off at my house, right? I could not pay my power bill because I couldn't get to any of that cash because banks wouldn't lend to me because I owned all this property, but my cash flow was tight. Because we all know what was happening with the mortgage meltdown, right? Basically, I owned a bunch of properties and I couldn't sell them. And I was caught in a cash crunch. So with life insurance, that's not going to happen. Life insurance, you can get to your cash anytime you want to and cash it out, or you can use the loan provision, right? And because it's a secured loan, the life insurance companies aren't worried about it. You don't need income to borrow that money. They're going to let you have access to it because they're holding your cash while you have the loan, so they're completely covered the whole time, right? So it really offers a lot of protection and a lot of flexibility. What I saw happening so many times is people were like paying extra into equity of their home, and then when something like 2008 comes along, or even people stuck with coronavirus and the whole situation happening there, like they can't get to that cash, right? They can't get to that equity, and if they need it, it can be a real problem. A lot of people in 2008 couldn't get to that, and they lost their house. So all that money they'd paid in was lost due to the fact that they had no liquidity. With life insurance, that's not going to happen. You're going to be able to access your cash anytime you need it. In fact, if you want to pay your house off early, I would argue that it's better to build the money up inside of life insurance and then eventually pay off your house so you're liquid the whole way along. And at the end of this video, I'll point to one of my videos where I break that whole thing down for you so you can see how actually using life insurance to pay off real estate, and the two work super well together, is a super powerful strategy to pay down your house faster and do it safely along the way, because you'll be in a liquid position the whole time as opposed to all your money stuck in equity, right? And the last thing that I want to bring up is both of these assets build confidence, right? I think there's some pride in owning a piece of real estate, and that's probably the coolest thing about real estate. You can drive down the street and you can say, I own that property. And there's something that, for me, feels really great about that. With life insurance, it's less tangible. It's like having a bunch of money in a bank account that's growing for you. So you don't have that same pride of ownership. But to me, there's still a confidence in knowing I have all this money over here in a life insurance policy I can get to anytime. It's growing for me every single year, guaranteed. I've got tax advantages, and if I do it right, I'll never pay taxes. And if something happens to me, there's money there to take care of my family. Not just a piece of property that they have to deal with or fix or sell or all of that kind of stuff. Liquid cash that they're getting income tax free, that they can do whatever they want to with it. So I really would argue that life insurance, if I was looking at how to grow my wealth, should I do real estate first? Should I do life insurance first? Because I really think in a perfect world you should have both. But I would start with life insurance. You can start with less money. You can start as little. I think building this kind of policy as little as about $300 a month is where it really starts to make sense. You can build up the down payment, use the cash from your policy to buy a piece of real estate, and then we even teach you how to turn that into your own banking system, which can be super powerful over the course of your life, but that's a whole nother video. So if this has been valuable, please hit that like button, subscribe if you haven't before, join us and drop a comment down below. Let us know you're new. I'll welcome you to the family. And let me know if you like this content, or if you have any questions, drop them down below. The last thing I want to say is this: life insurance or real estate, it shouldn't be an either or. I believe if you start with life insurance because that's the great place to build up your cash, use it to buy real estate. Real estate will kick off more cash flow so you can build up your life insurance even further, buy more real estate. I truly believe the two work together, but I would argue that life insurance is an equally good, if not in some situations better asset than real estate, and that's saying a lot because I love real estate too. If you want to see how you can use cash flow banking and life insurance to pay off your real estate faster, check out this next video and we'll see you on that one.